Well, hey everybody, Blair Nightingale here. It's Market Monday. Market's actually closed today, President's Day. So market is closed all day today. So we're actually going to be looking at what happened at the end of the day, Friday. But specifically, we've got a special event coming up with myself and one of the other Tradeway coaches, Ross Query, and he and I are going to help prepare you for a potential bear market. We want to take an entire session, both him and I, this Wednesday. I'm going to give you the information on how to join a free webinar with us this Wednesday. We're going to talk at length about bear markets, what we can do, how we see them coming. Today is going to be a bit of a preview. I really want to just dive in and do something we haven't done on Market Monday for a little while, which is just get into the market. Let's look at the market a little bit, get an idea of what's going on. I've had a lot more people in my personal life even asking me questions. Hey, what's going on with the market? Because that's typically the question I get when things become more volatile, unpredictable, and negative. So there's a few drivers right now that are causing more negative conditions. I want to talk about that, but I don't want to talk about that in an abstract way today. I want to talk about that in terms of how you and I need to know that we can be prepared and we should be prepared for the market to drop. Now, I'm not saying, and I'll say this right at the beginning, I'm not saying I expect us to be in a bear market tomorrow, but we are getting closer, right? The NASDAQ is down 18%. It's already in a bear market as it is. The overall market not there yet, but it's definitely down and conditions are changing. And so we want to talk about that. There are some things I think that you need to know in the economy as a whole, how to protect yourself, how to protect your money. We're going to talk about that more. Like I said, going to give you a preview here today and give you an opportunity to ask questions. As we always say here on Market Monday, this is a time you can come on, our friends on Facebook, our friends on YouTube. You can come in here. You can post questions, concerns, comments, anything you want. We usually get a lot of weather reports from around the United States, as well as our friends join us on here and just let us know what's going on in their neck of the woods. That's what we're like around here. Tradeway is a community. It's a community of like-minded people who are interested in understanding how can the stock market help me and my family reach our biggest financial goals. That's what it's all about. We don't just come on for information's sake. The information is supposed to translate into breakthrough for us and our families. So that's what this is all about. So please go ahead. Don't be shy. Don't be afraid to say hi. Let me know where you are, where you're from. If you're a regular on here, of course, if you're new, a lot of you guys will be watching this on the recording. I know that. You're on YouTube. YouTube keeps these episodes forever, right? So we got a lot of Market Monday episodes. So if you're joining us on this episode shortly after it was recorded on February 21st, 2022, or much later, we're glad to have you. Certainly, we've got some things here for you that I think are really important. So let's go ahead and dive right in. You are looking right now at a chart of the S&P 500. We had a nice uptrending pattern. What's an uptrend? Higher highs and higher lows in the price. See these peaks and valleys? Goes up, comes down, hits the line, goes up, comes down, hits the line, goes up. Oh, couldn't make it up. Couldn't make it up, drops, and then tries from there a couple of times, drops again. So we had it break the pattern, try to recover, not all the way down, try to recover, back down to this line, back up, back down. If that was confusing to you, I said to some students this morning, then that's pretty much what I'm trying to communicate. We like to call this a squirrel market. You maybe have heard of a bear market and a bull market. Well, this is what we like to call a squirrel market, where we look at the S&P 500, the market as a whole, and we recognize it's not really in a reliable, predictable, repeatable pattern, okay? Here at Tradeway, we don't believe that we have the crystal ball to exactly guess, gamble, go for it in the market. We don't do that. That's not what trading is. Trading's not guessing, gambling, or going for it. Trading is knowing where the best opportunities are and then managing yourself well in those opportunities. It's not about guessing. It's not about knowing what the future is. And in this case, we can't really get reliable, predictable, repeatable because it's changing so much. So if you're feeling confused by the market right now, I don't blame you. And some of us need to hear that. Some of us need to hear, you know what, it's okay, Blair, I'm out there and I'm looking at trades and I'm feeling like I don't really see a lot of consistency in a lot of the stocks in the S&P 500? Well, that's because it's very volatile right now. Now, I'm going to say this, especially for people out there who've been trading longer and you're more experienced. The truth is that you will be able to find trades depending on your skill level. There are opportunities. The market always has some opportunities, right? Here at Tradeway, we don't just teach one skill set, right? Buying stocks and selling stocks. We teach multiple skill sets so that we give you the potential to make money when the market's moving up, when it's moving down, even when it's moving sideways, okay? Sometimes trades that take a little bit longer, sometimes trades that are very short, okay? So with a multitude of skills, again, I said this isn't just about having more knowledge. This is about being able to use the right tool for the right job. And the market right now is in a squirrel, right? That's what I said we like to call it here. It's in a squirrel. It changes directions a lot. It's unpredictable, right? It's in transition. And that's the simplest way to put it. The market's just transitioning, okay? The market is transitioning. So if you have the skills, then you'll have a little bit more flexibility. But for a lot of us, we're just feeling better about our money to say, you know what? Cash is a position, right? A lot of us feel like we need to be in the market all the time. Cash is a position. I'm just going to stay on the sidelines right now until I see more consistency. Certainly, if we're purchasing stock and we're looking to trade stock, remember there's a difference between long-term buy and hold and trading the stock. Ultimately, what we want to do here is say, I need an uptrend. I need upward movement if I'm going to buy the stock on a basis of trading the stock. Again, not long-term buy and hold. I'm not saying everybody out there that has long-term positions should be going out and thinking about selling all of that, right? But in a trading mindset, we're looking for more short-term. Swing trading is 2 days to maybe 3 weeks, right? That's basically the time frame we look at with trading stocks. And so if we think in that mind frame, then I'm not going to want to buy stocks while the market's moving down. Now, one thing we do see here, and I'm going to go ahead and use these little squares here so you can see what I'm talking about. Right there, right there, right there. And, oh, let me click on that like that. And then this guy right here. Okay. A high, two highs, and a high. It's getting lower. It's that simple. If you and I could learn to look at a stock chart and just say, are the highs getting lower or are the highs getting higher? And if they're getting lower, then by definition, we're looking at a downtrend in the market, right? It's weak. It's weak. You say, well, Blair, is that it? Is that all I need to know? Isn't there more? Of course there's more, but really at the ground level, we can clear up a lot of what we need to know as traders about what we should be doing by simply looking at that. Are the highs getting higher or are they getting lower? And in this case, they're getting lower, which means what? It means the bears, the sellers, are taking over more control as time goes on. Now, that may not stay that way, but right now, that's how it is. Meaning by default, the buyers, right, the bulls, are losing control as time goes on. They've been trying to bring this thing back up, but they haven't been able to do it right now. So what would I look for? Well, we had a pretty major turn right at this red line down here, which our software plots as the 300-day moving average. Okay, 300-day moving average. So it's dropping in here. I would expect potentially this week that we see a bounce at that level, or at least we see a test, I should say, a retest of that level. So whether you're looking at short-term positions or perhaps you're looking to protect some long-term, because the market is pulling back, we're in correction territory. Corrections in and of themselves are not unhealthy. Okay, they're not unhealthy. But I understand there can be some concern over our long-term money. If we were to break that 300-day level, that's pretty significant. Okay, that's pretty significant. This level right around here, you can see this green line where a lot of these days bounced last 2 weeks ago. That's what we had back here. Okay, so if we break that, then we've got a little ways down to go. Now, you'll see a lot of old lines left on my chart here. That's how I do it because sometimes those come back into play. But if we can break that line, I'd say that's pretty significant, right? That's pretty significant. That's going to tell us that things are not just negative, but they're really negative. Okay. If you go over here and you look at the NASDAQ today, again, this is the close of Friday. Okay. It breaks out of that downtrend right here, right? Tries to go up, does the same thing, test that high, and then is failing, right? This one down 18% or close to today. Actually, I got to go. Sometimes this will pull up a second. There we go. That's the chart I want. So if this continues to drop, it's going to weigh down on the major indexes. And you and I are going to have that question. Where are we at? Where are we at? How do I know if it's a bear market? What exactly is a bear market? How can I be prepared for this volatility? If I've got long-term money in, how can I protect that? I'm going to tell you this on Wednesday. What's the number one question I have for anybody who has a financial advisor managing their money for them? Okay. There's lots of questions that we could teach you to ask. And your financial advisor may be great, right? They may be awesome. So I'm not saying that, but there's at least one question that I want everybody to be able to ask their financial advisor in terms of how to protect your money during recessions and bear market crashes. Okay. We're not saying this today because we anticipate, or that I anticipate, we're going to have a bear market crash immediately, right? So I'm saying this because the fundamental conditions in our economy, they are changing, right? We're seeing volatility in the market. Now, we've seen that before, right? Let's just go back here for a second. I'm going to shrink this down. Look about back in here. That was in September. What happened? Well, the market fell, right? Even back here, right? February back here, right? A year ago, that we had some volatility. I mean, corrections when the market goes down 10% from its high, that's not abnormal. In fact, in some ways it's healthy. It resets the prices, because sometimes buying in the stock market gets a little bit out of hand and prices are too high. So there's a healthy sell-off, right? And it's a little bit deeper. It's a little bit more volatile. It resets prices and things are able to advance from there again, okay? What I'm noticing now is that we, as I've said to many Tradeway students, we have something called inflation right now. Now, inflation is really, simply put, you're looking around and noticing that the cost of goods around you is going up. In fact, they're going up right now at a pace that's a 40-year record. We haven't seen this since the early 80s, right? I've talked to some students out there who talked about their home loans in the late 70s, early 80s, paying double-digit percentages, which is, I'll tell you, I think a lot of people in my generation have never even heard of that. Well, our inflation is not in double digits, but it's getting high, and they're looking to aggressively control that. So without going too far off the map, for you and I as traders, we may hear about the Fed, right? The Federal Reserve or the federal bank. The federal bank is basically an arm of the government that has the power to control interest rates. And the reason that we're talking about interest rates is because that's one of the main ways that they control inflation. Okay? They control inflation. And I'm going to tell you why I'm telling all of this to you right before I even explain any more. Because sometimes it's like, well, why do I need to know that? Is this just money talk, or does this really help me as a trader? Why I believe it's important to ask good questions about a bear market or recession right now is because all of our bear markets and recessions, save for COVID, right? COVID was a little bit different of an animal because we just shut down the economy. But all of our recessions other than that have been precipitated by an increase of interest rates. And eventually interest rates cause, or are part of the cause of recessions and bear markets. When you and I can borrow money for nearly 0% or even say 0%, you and I are more apt to borrow money because we're not going to have to pay that much interest on it. It's basically, we have to pay back the loan, but we don't have to pay a lot of interest. It's much more attractive for you and I to take out loans. If you could get a great loan on a car, if you could get a great loan on a house, products, a business loan, right? Whatever it is, you might be more apt to do that if the interest rates are really low. That means you and I are more apt to borrow money and spend it. If you and I go and we spend a bunch of money, we're spending it on these companies. And that means companies are going to be profitable, they're going to grow, and Wall Street loves growth. So they're going to invest, they're going to pump money in the stock market, and you and I are going to see it go up, right? That's how that works. Well, what if one day we realize it's not as easy to borrow money? What if the interest rates start going up on all of our loans, right? We can't get the same low interest financing on whatever it is that we want to do. What if companies are feeling that as well, right? It goes across the economy. If the Federal Reserve, that arm of the government I said is responsible for interest rates, if they decide to raise these, essentially what they do is they dampen the demand in our economy. They make it a little harder or a little less advantageous for us to borrow, lend, and spend money. And if we're not spending as much, well, then the economy is not going to be as vibrant. It's not going to be as strong. Now, this is potentially a tool to bring inflation under control because they're killing some of the demand, right? The supply is going to be able to flourish a little bit. Some of the demand is going to go down, thus, theoretically anyway, helping inflation. But for you and I, why is that important as a trader? Because as a trader, you and I are going, what is Wall Street like? Cheap money. So that what? So that companies will grow, and they're confident. They're confident that companies will grow and we can pump money into the stock market, right? As traders, that's what we want to see. I tell people we can have price movement in the market or we can have price momentum. Momentum is always better, right? Movement requires more precision. Momentum is what we want in the market. Reliable, predictable, repeatable patterns, preferably uptrends that are moving with momentum, right? In the first year of a brand new fresh bull market, that's some of the easiest trading that you can potentially have because there's so much momentum. It just feels like it's always going up, right? That is momentum versus movement. And what we want, that is that condition. And when things start to get a little more foggy, we stop getting that kind of momentum so much, as I show you here on the chart. So if the interest rates are rising and there's a bigger question mark, guess what? The big money in Wall Street starts to hedge their bets. They start to say, you know what? This isn't maybe the most advantageous place for my money. What happens when the big money comes out of the market? The market falls. The market falls. If the big money on Wall Street, what we like to call the big boys, are taking their money out of tech stocks and putting them in safer places, what's going to happen to tech stocks? They're going to fall. If you and I keep going out and buying just because we like Apple or Facebook or whatever stock it is, and we don't understand that some of these factors are at play. Now, I'm not saying those stocks are going to crash tomorrow, okay? I'm not saying that, but I am saying we're seeing tech stocks take a beating. Why? Because those are the riskier assets that are way overvalued in the market, right? At least when you look at their valuation in the market versus their earnings, this is something that we have to contend with on some level. So this is going to cause some volatility. And when we look at the economy as a whole, if the Federal Reserve feels like they've been behind on raising interest rates and they're going to do it more aggressively this year, that is going to create volatility for us as traders this year. And it's going to mean that we're at least seeing one of the major signals that points more towards the economy contracting versus expanding, which means closer to a bear market, recessions. And at Tradeway, we understand that recessions, they're going to happen, right? There's no way for us to totally eliminate the potential of a recession. They've always come around eventually, and they probably always will again. Now, we don't get taught that. We get taught that maybe they're just the worst thing ever. And I don't like recessions. I'm not saying that that's a good thing for everybody, but I am saying economically, it's always been something that happens. It's like winter. Winter eventually comes. Things reset. If you and I have skill sets to know what's coming and to know what to do when it's coming, right? What do I do? How do I protect myself? And even have skill sets to promote your finances in a recession, right? There are tremendous opportunities in those kinds of conditions, right? And that's something that we want to talk about as well. So if you've not heard any of this before, please join us. I'm going to go ahead and I'm going to grab that link. But first, I want to show you here, you can see this page. This is our Tradeway community page. Some of you guys are in the program and you've seen this. This is one of the things I would post in the community page. I had some thoughts about this that I wanted to get down for our students so that they could see what's really happening right now and maybe some things that they hadn't thought about. You can see I posted this about 3 weeks ago. And I'm talking about just how important is it, this thing that we're doing. Learning to trade, yes, but also saying, you know what, how can I really get a deeper understanding on how to partner with God, how to partner with others in my finances? I want to grow. That's one of the things that's happened for me at Tradeway. You know, starting at Tradeway, I wasn't just learning to stock trade. I was learning about money. I didn't know much about money. Some of you guys know more. A lot of you probably know more than I did when I started, right? I didn't know anything. But it got me to a place where I realized that the Lord wanted me to understand finances in this age, in my generation, because we're called to be stewards of everything that we've been given. And I not only want to steward it, I want to increase it. And I want to impact my generation. I want to impact this nation. I want to impact my family. And it's more important than I even initially realized. This is what I'm talking about here in this article. Some of the things I'm showing you are, for example, look at our national debt, okay? Look at our national debt. Here we have a chart. I'm going to show you part of this, okay? You can see the slope there. It's definitely starting to pick up. That's all the way up till 2002. Here is just the last 20 years. And this is the slope. Notice the slope and notice the slope. Okay. In 2017, the national debt was $20 trillion. Just 4 years later, the amount is approaching 30 trillion. Okay. So this is really significant. Then we talk about the Fed. Then we talk about socialism versus healthy capitalism. These are some things that I never used to think about. And again, this isn't just abstract information, right? For those of us who are interested in saying, you know what, I want to steward my finances the best I possibly can. I want to be a part of God's vision for my finances in this time. I want to impact this nation. I want to be a part of the solution. And that could even just mean, you know what, I want my family to be as secure as I can possibly make them, right? You get to fill in the blank there. I'm not filling that blank in for you. You're doing this for the reason that you're doing this. But we here at Tradeway seek to equip you with a really holistic perspective on what's going on, because I want you to be able to be ready, not only for the risks, but for the opportunities that are around the corner, right? That's what we do. So ultimately, it all comes together this Wednesday, right? This Wednesday, I'm going to grab that link for you right now. I actually have it right here for those of you who are joining me in the back. If anybody has any questions out there, please go ahead, drop them in the comments right now. I would love to hear from you guys. Let me know where you're from, what you're thinking. If you've had any thoughts, man, this volatility is a little bit scary, or it's a little bit confusing, or maybe you've got a skill set and you've been sitting on the sidelines and you know exactly what you want to do in this time. I want to hear from you, because that's actually really powerful. That means you've got an education and you've been putting it to work in a way that is creating peace in your life. And one of the things we want to do here at Tradeway is help people have peace in their finances. Let's go ahead and copy this. I'm going to post this in the link for you guys. Let me go ahead and do this. Okay, there we go. Bingo. There's your sign up for Wednesday. Ross and I will be doing that. Facebook, YouTube. You guys should see it in the comments right there. So we're watching this week. Bring that chart back up. Ultimately, most logical thing right now, and I started by saying this is a squirrel market. So it's not doing what's logical, right? It's doing whatever it's doing. But I would look for a retest around this 42.90 level, and then from there back down to that 300 day. We'll see what they do. If they can drive it down, We've also got a little bit from Russia. I was speaking to somebody earlier. Some of you guys might be wondering about this. You've seen the news, Russia. Potentially I could see some risk there from Russia based on the fact that this may, destabilization in a significant way around the world can affect our markets, no doubt. More specifically, I might see some pressure on energy or oil. If you start to see that, we could see cost of goods in that area rising even more. In fact, I think the president has talked about that we may see higher gas prices as a result. I have some comments on that based on how we're just a short time ago energy independent. That's the benefit of having energy independence. I'm not fully convinced, or I should say, I'm not happy that we had it and we don't have it. And this is one of those scenarios where I think that becomes pretty clear as to why that was very advantageous. That said, we may see those prices rise even more if we continue to see instability and even war, right, between Ukraine and Russia. And that could drive up prices for us and cause inflation to be even worse, right? That's something to consider. We might see the Fed a little bit more aggressive if that happens as well. Other than that, this is Blair's opinion. Everybody out there, you can just chalk this up as Blair's opinion. I don't necessarily think Wall Street cares that much about Russia. We'll see. We'll see what happens. That could play out and we could see some information come forth that makes a little bit more sense. To me, sometimes Wall Street news seems to just pick a story. Now, this is a significant story. I'm not making light of that. But I think Wall Street sometimes picks a story, or at least the Wall Street media picks a story. And when there's volatility and bearish conditions in the market, they just say it is what it is. I think more so we're looking at the Fed. The Fed is really the thing in focus here. And, we're certainly praying that there's, peace in Russia. That's not something I want to see for sure. But I don't think that has as much to do with what's going on in the market as it may initially seem. I mean, I can even see, in fact, you can notice here on the chart down here, futures drop as Putin recognizes Ukraine rebel regions, right? They do that. They print that. I could be wrong. It's Blair's opinion, right? That's why I said that. I think it's in the mix. I don't think it's the main thing. I think the Fed's the main thing. And for you and I as traders, that just keeps it simple, right? We usually have one or two major at max news items that we really need to be paying attention to. I think it's the Fed. I think it's going to drive volatility this year. And that's the thing we need to watch. So as the market is dropping, they say, don't try to catch a falling knife, right? Let it hit the floor. And when it stops falling, then go ahead and try to pick it up. That's true in stocks. So if we're looking to stock trade, when this thing hits the floor, then we want to go and look at the opportunities we have. Ross and I are going to talk more about that on Wednesday. All right, guys, thanks so much for being on today. I appreciate you. The link is in the chat, YouTube, Facebook. You can sign up for that free topical, and we are going to dive right into the whole thing on bear markets, being prepared for that. And what's that one question? Just one simple question that you can ask your financial advisor. I think it's the most important question you could ask them. Okay, we're going to talk about that on Wednesday. Appreciate you guys. Have yourselves a good night, and we'll see you next time.